This is Shawn Wilmoth, broker extraordinaire, talking to you from Albania today. I'm a commercial realtor and residential realtor in the greater Eastern region. I want to talk about DSCR. That's my topic for the day. DSCR stands for Debt Service Coverage Ratio. This is an important banking term. I'm not a lender. I'm a broker, but I'm familiar with that term, and it's been an issue of not contention at all, but certainly an issue of concern for me as a personal private investor myself. Debt service coverage ratio, this means that it's a ratio between how much debt cost you have versus how much income you have. So maybe they want a debt service ratio of 1.2. So that would mean you make $100 on an apartment a month, or you take in $120 on the apartment a month, but your debt cost is $100 a month. You see what I'm saying? So that'd be a 1.2 debt ratio. And maybe that's enough. Some banks may require a 1.26 or a 1.28 or 1.30. In other words, they want to make sure there's enough spread there for you to take care of your livelihood, still pay the bank. So I want to talk about something that I've never used. Maybe it's a good idea. I don't think it's a great idea. But there are these new loans called Debt Service Coverage Ratio loans, DSCR loans. And basically what they mean is that they are a debt service coverage ratio of 1. So that means I get $100 a month in rent. All $100 goes to cover the debt on the property. These are commonly used for newbie investors, say an investor in, say, Airbnb. They will look at the debt service coverage ratio, not based on you and you have car payments and house payments, but only on the house or the building itself. And say it's Airbnb, this would be a popular use of that. Airbnb is generating enough revenue to pay the bank. The bank feels confident in that. They will let you buy that basically with zero money down or zero personal investment in it, and it is only covered by the income of the property itself. That's a skinny deal. Maybe for some people it's really not for me. I wouldn't recommend that, but it does happen, and it's important that you understand the term debt service coverage ratio, because banks look at lending, and again, I'm not a lender, two basic ways. They look at loan to value and they look to debt service coverage ratio. In the past, I think it was more popular, I would say 20 years ago, that they might say your loan to value ratio is great. You know, you 75% of debt for 100% value in the property. So let's say you've got $100 property, but you're only borrowing $75 worth of lending on it. That's how they would look and approve a loan. But then they got a little smarter and they said, hey, look, what if there's not enough revenue to make the payments? Let's forget about the value of the property. We don't want to get in. Banks don't want your property back. Let me explain that to you. They're not greedy in that respect. They may be greedy on the rates and other things. They may not be greedy at all, but I'm just saying, people think they're just dying to get my property back. No. The banking regulators, they don't want to see banks holding properties, taking them back. It's ugly, it's expensive. Lawyers involved, trust me, they don't want your property back. So the lenders start looking at another way, which is global cash flow. So if I make $130,000 a year overall, then this is called a global debt service coverage ratio scenario. I make $130,000, but my debt coverage is $100,000 a year. So that's a 1.3 debt service coverage ratio. They prefer now to look at DSCR versus the amount of money against the value. So loan to value, out the door. I mean, it's still there. They want to look at that. They want to know that's reasonable. But debt service coverage ratio is more important to them, and it should be more important to you as well, because this is a great indicator of what if something happens, you only have, a third or 30% additional income to cover. So that means that if a renter moves out, or if something happens to you personally where your income drops, you could be in a sticky situation. You don't want to do that. So, my name is Shawn Wilmoth. I am broker extraordinaire talking to you today from Tiranë, Albania.